TheoTrade. This is Don Kaufman. July 18th, 2022. We are just minutes after the cash close here on this Monday afternoon. Markets completely reversing on what I term a sour apple that just ruined a decent rally. S&P's closing down some 30 handles. When I say a complete and total reversal, you have to respect the sheer magnitude of today's move. And the reason I say you kind of have to respect that is, so in the S&Ps, we traded all the way up to, let's just call it 39.10, effectively down to 38.20. So for the most part, you see this 90-point range. Why that is so interesting is that if you look at the SPX and you look at this week's expected move, and I've been discussing this just ad nauseum on the weekend updates, okay, the expected move this week was plus or minus roughly $88. Okay, we had that range effectively today. Now, we did not hit the lower edge or upper edge of expected move. Nevertheless, when you see a move on an intraday basis that rivals the entire week's expected move, you have to have cause for concern on that particular front. Some more banks out with earnings. Everyone from the likes of, Goldman Sachs, of course, we'll bring it up here briefly. Goldman Sachs also saw a pretty significant reversal. Nevertheless, still finishing higher on the trading session. With that, there are banks that actually have turned around quite considerably. One of which, of course, Bank of America, which it missed, rallied, and faded on the day. Again, the entire financial sector, however, did in fact close down on the day. But as I said a moment ago, the trading session, early on today's session, even before the cash open, we actually received the home builder report. It's actually like a consumer sentiment number. That number dove by the most on record. One of the things that I continually have mentioned in the last couple of weeks is it doesn't seem to matter what the earnings announcement happens to be. It doesn't seem to matter what economic data drop is coming out. The marketplace has just been staring and moving right along. The interesting aspect happened to come today when Apple did in fact have an announcement. There was a slowdown in hiring. There's going to be a slowdown in spending. That, and only that, really rocked the market. Clearly, it's the largest market capitalization out there. Apple coming down by the tune of 2%. Well, it was even more dramatic than that because Apple obviously was up. Was up prior in the day. It's a complete and utter reversal. The reason I'm bringing this to your attention, again, neither the home builders nor oil price, okay, I could go on and on and on of all the factors. Bank of America, again, I was bringing up Bank of America a minute ago because it missed. And initially, okay, on the report was down and down quite significantly. Didn't matter. Why? Because when Goldman Sachs came out with their numbers today, rallied the entire financial sector. The market has been moving as a whole lately. But this Apple announcement here, okay, it really was kind of souring the entire marketplace. It's the first time that we've actually seen some individual stock, okay, in weeks make, okay, a significant impact to the S&P 500. And again, of course, because it's Apple. Again, not even home builder sentiment soured this marketplace. It took Apple. Now, push Apple aside for a second. Great, it reversed the market, but it's only 0.7%. It was just, again, the sheer magnitude of the move today that really caught my attention. We've also seen some decent movement on the front of volatility. Well before the Apple announcement ever came out, volatility was already somewhat elevated. Now I'm talking about volatility. We saw everything from 9-day volatility, it was already elevated before the Apple announcement. VVIX, slightly elevated again before the Apple announcement. And I'm bringing this up because I've seen, again, this kind of movie before. The market, in effect, was pricing degrees of risk. Did it know anything? Absolutely not. But pay attention to some of the signs on the screen from time to time. Some of those signs, again, not knowing that the Apple news was coming out, but the marketplace, again, was still priming itself for risk, knowing that we're going to have earnings, like, for example, tonight. Okay, earnings tonight, IBM. I don't necessarily think that that is going to be a really huge consideration. But as this week progresses, some of the earnings announcements are really going to pick up. Of course, tomorrow after the bell, we're going to hear from the likes of none other than Netflix. Netflix, which I'll again mention momentarily here, a very, very dramatic implied volatility coming into the announcement. Moreover, we've got Tesla coming later in the week. So I'm inclined to believe that by looking at these implied volatilities coming up before the Apple announcement, the marketplace was just anticipating a bit of risk on a few possible marquee underlyings hitting their earnings announcements. So lo and behold, again, there's a critical shift here. And that's exactly what I'm trying to get to. All of a sudden, the market's paying attention again to what has been, in fact, some negative news. All right, speaking of Netflix, come back to Netflix for just a moment. There are warning signs all over this thing. If you're curious as to what I might do in Netflix, the first thing I am going to tell you, I don't care how high that implied volatility happens to be. There is no way I'm selling anything in here naked. It's almost a 200% implied volatility. We're coming up close to a $32 expected move on what is less than a $200 product. Now, you might be so inclined and so curious as to, well, what happened in Netflix the last earnings announcement? It was absolutely brutalized. This is a move that moved the stock from 340 to roughly what? We'll call it 220. In the last earnings announcement, here it is. When I say the last earnings announcement, I just backed up to the previous earnings date and think back. It had about a $39 expected move. So I know what you're thinking. Hey, the expected move is even greater in the previous earnings. Yeah, that was a $39 expected move, though, on a $350 product. Okay? So roughly speaking, what do we put it at? It's about like a 10% kind of move being priced in. What do we have now? Ooh, almost a $32 expected move on a $190 product. So we're anticipating right now what? North of a 15% move. That is wild. By the way, if you're curious as to what exactly happened last earnings, let's move the date forward. Stock actually sold off 122 points. Again, let's just round it to a $40 expected move, 120 plus point move. So in terms of the number of deviations, that is just downright hideous. Anytime you start seeing like 3 and 4 sigma type moves, you got to be nervous. But this is where a lot of people will look at Netflix and they'll think, oh, opportunity knocks. Look at all that implied volatility. I have to tell you, based on the implied skew in the shortest duration here, I would be more inclined to buy an iron condor here than sell an iron condor, because the skew, interestingly enough, the skew is heavy on the put side of things, but the skew is also prevalent on the calls. This does not bode well for anybody trying to use like an iron condor. And the reason, is you would be, for instance, in an iron condor, selling like a 175 vol, turning around and buying, possibly a higher vol, lower vol is minimal, but the skew is kind of flat in here. It's not easy. And on the put side of it, it's just hideous, This just has risk written all over it. And I like to emphasize this because in no uncertain terms, like selling options naked, and of course, You know, like, oh, they're going to work out. Like 9 out of 10 times this thing could work out. Yeah, and unfortunately on the 10th time, you get that 3 or 4 sigma move and you get completely wiped out. There's no hedge for a fast move around earnings. I'd be really on edge with some of the negativity surrounding, for example, even Apple today. The entire marketplace at that point in time, okay, happens to be, again, it's on edge, and we really are. Speaking of on edge, kind of wrap things up in this evening's video with a quick glance of IBM, expecting almost an $8 move. What do we have right now? Absolutely nothing. Okay, does appear maybe some of the numbers are out, but the stock is actually drifting right now. And when we take a look at earnings, again, I am much less inclined to ever look at the physical numbers. Read price action, read the fact that it has an $8 expected move. The actual numbers, it's neither here nor there, because as we found day in and day out, like in the financials, didn't matter, the Bank of America may have missed. Don't worry, they're still going to buy back their own stock. But it doesn't matter that they miss, because Goldman Sachs, okay, its rebound to the upside dragged the entire financial sector up. Of course, ironically, until Apple came out, crushed the entire marketplace today. It's a lot to think about. Again, recall the expected move for this week, and I cannot stress this factor enough. Okay, just about $88. Huge move, okay, on this Monday. Anticipate some wild and woolly moves. We are just a hotbed for any type of economic report and or earnings at this point in time. So with that, again, define risk when possible for short-term trades. Do not sell short-dated premium. If you're going to be selling premium, use Ultima. Go further out in time. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.